Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Norah, Mulinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. Earlier today on surveillance, we had Dan Ives from Wedbush Securities on doing a little victory lap on his bullish Tesla call. The stock's up 17% today, the most since March of 2021 on the back of some pretty darn good earnings numbers. Let's break it down to Craig Trudell. He's a global autos editor for Bloomberg News. Joins us from Zoom, from London, on Zoom, on that technology there. Hey, Craig, what stood out to you? Why do you think the stock is up 17% today? What did you see out of the earnings release?
I mean, it was really it's really quite a combination because oftentimes it feels like it's not necessarily the case that you can count on both earnings and the vision to be positive. In this case, they both were working in Musk's favor. I think the earnings were much better than expected. I do think that those expectations came down quite a bit over the last year and a half. But they did exceed expectations by pretty significant measures, and the profit margins in particular are something that everybody keeps a very close eye on. Their automotive profit margins, when you back out the credits that they sell to other automakers for regulatory purposes, those in particular, I feel like are just quarter in and quarter out what everybody looks at. That was a big beat, and then I think Musk was as self-assured as I've ever heard. He's never one lacking in confidence, and for him to throw out 20 to 30% sales increase for next year, I think was very surprising to people after we're 9-10 months into the year, and they've delivered fewer vehicles in 2024 than they did in 2023.
Hey, Craig, so when I'm walking around New York City, every so often, I will see, to my surprise, a Cybertruck. What is the latest on that? What did they say in earnings? What can we expect there?
Yeah, they said that it was gross margin positive for the first time in the most recent quarter. And so we're roughly a year into the launch of that vehicle. So I would say that's a little on the early side, just relative to how Tesla has sort of done with new vehicle launches in the past. So that is another positive. I think in terms of volume, it's still quite low relative to the Model Y and the Model 3. That is still where you see the vast majority of Tesla's deliveries. So much so that Tesla has even yet to break out that vehicle in terms of quarterly results. And so I think we have a rough idea of how many they've sold, ironically based on the recalls that the company has had to do with the vehicle. It's as of the latest recall which was just a few weeks ago, it was around 27,000 units, I believe. So that's pretty small for a company that may sell somewhere in around 1.8 million vehicles this year.
Where is the focus from the company here in terms of it seems like they have a lot of balls in the air. Obviously, the car business itself, robo-taxis, artificial intelligence. What do you think they really want you to focus on? What does Elon want investors to focus on, do you think?
I think that's actually really one of the most interesting things here. And I think Liam Denning's column for Bloomberg Opinion this morning, does a great job of laying out this idea that, Musk's emphasis has really been on, don't bother with the here and now, forget the near-term earnings. The sort of big potential for this company has to do with, selling self-driving cars and humanoid robots and things that, we've heard Elon talk about time and time again, but not actually deliver. And I think, if you're sort of looking at this company sort of glass half full, I'm less concerned than I am today about the here and now of this company and the earnings power of Tesla and its current business, and therefore more encouraged that they have the ability and the time and the financial wherewithal to go out and pursue those big stretch goals that Musk has set for the company, and depending on who you ask, may or may not be able to actually follow through on his various predictions.
Well, from an equity perspective, this stock has been all over the place this year. I mean, we were just looking earlier, and year to date, the stock was in the red. Now it seems as though today's gains have pushed it to drift about 0.8% higher for the year. What's the bull case here? What are people saying? How much legs do they have to run? Can the stock go much further? What's the consensus there?
You're absolutely right. I mean, back in April, this was a stock that was down 43% for the year, and so for them to have come all the way back, it sold off quite a bit. After the robotaxi unveiling just a few weeks ago, and we've now seen the shares go positive again for the year. We'll see if they stay in positive territory. I think whether or not the company can actually grow next year with deliveries, I think is really important, because even Musk, who's sort of perpetually said next year will be our year for autonomy, even he is saying that this Cybercat that they showed a couple weeks ago isn't going to be ready in 2026, and so we need this company to bring more affordable vehicles to market, to make Teslas more accessible to more consumers, and get back to when it's growing again, to put it simply. Right. And I think it's still unclear what exactly they have to offer that's going to help them get there.
Craig, thanks so much for joining us. Really appreciate getting some of your time and perspective. Craig Trudell, he's a global autos editor for Bloomberg News. He's based in London, joining us via that Zoom thing. I think for me, and I think for a lot of investors, and a lot of people that just think about the EV business, what is the ultimate demand out there for EVs? We had the early adopters go. We've had the people that just love the technology. They've bought their EVs. Now it's about, okay, now I got to service the rest of the people. The people that want value. The people, they may want cool design.
Get the rest of us on board?
Yeah, so I'm just not sure how that plays out. We've seen some of the existing auto manufacturers like the Volkswagens and Fords kind of pull back a little bit.
Exactly. They started to pull back on their development there because they weren't really seeing demand, as you just mentioned. So I think it's really interesting when we think about the broader landscape and whether or not they're actually going to be able to attract the broader group. Yeah.
You got that whole thing about the charging network. You got to, a lot of people I talk to say, when the charging network is like the gasoline station network in this country, that's when I'll think about an EV. I don't know how that all plays out, but great day for Tesla and its shareholders.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Boeing not getting the deal done. What's going on there? Because they need to get people back to work. They need to start cranking out some airplanes and getting some cash into the door. Our next guest has some thoughts on all this whole labor negotiation unrest issues, workplace issues. Jessica Kriegel joins us in our Bloomberg Interactive Broker studio, chief scientist of workplace culture, and the firm is named Culture Partners. So there you go, joining us here in our Bloomberg Interactive Broker studio. 35% seem, or 30%, whatever it was, seemed pretty good to me, helping out with the 401ks. Then labor comes back with defined pensions. Now, my response would be, I'm 60 years old. I don't know one person with a defined benefit pension plan. That's 1970s. Can you give us your thoughts about what's happening between Boeing and their striking workers? How do you view it?
I don't know anyone that has a pension anymore these days, but they've been asking for it since the beginning, and it's a non-starter. They're not going to get the pensions. I think Boeing will literally go bankrupt if they have to give up those pensions. But they have been asking for 40% since the beginning. Okay. Boeing originally offered 25%. They said overwhelmingly, absolutely not enough. Then they came back at 30%. which was their quote unquote best and final offer, but apparently not, because 2 weeks later they came back with 35%. And they've got 2/3 of the union that is still saying that's not enough. A third has been converted. A third did say, yeah, I'll go back to work for that. So they're getting closer, and they're going to have to bridge that gap. I think they'll have to go to 40%. And since they're probably not going to get the pension, they might have to go above 40%. They might have to go to 45% in order to say no pensions, but we'll give you more, and we'll give you a bigger signing bonus to make up for all the time that they haven't been paid. It's hard right now for the union workers.
Right. Jessica, I know that you are of the opinion that management has been so focused on their balance sheet that they've pretty much forgotten about the workplace culture. What does that look like? I mean, how do you kind of turn that around? You did say that it seems like it's a little bit too late now.
Yeah, I mean, CEOs all over the world are focused on driving results right now, and some can take that so literally to only mean focusing on the financial results. But as we're seeing with Boeing, this is a classic example. If you focus so much on the financials and not on the hearts and minds of your employees and bringing people along for the ride, culture is really about how you think and act. It's not about the buzzwords you have on a poster board about your values. Kelly Ortberg did an interview the other day saying we got to focus on culture change, and we're doing that right now by revisiting our values. I mean, is that really going to move the needle for the people who feel so much resentment, feel like they've lost so much? They have to see leaders take the lead on culture change, which means pay us what we think we're owed, show up on the floor, stop focusing so much on the balance sheet, and also focus on quality control. Also focus on what we as people bring to the organization and what we need.
High school buddy of mine, lifelong engineer at Boeing in Seattle. And he says, hey, you know, he's not a radical dude. He's just saying, hey, this is what I think happened. Management left, the C-suite left Seattle 20 years ago for Chicago. Now
right.
now they're in D.C. That felt to a lot of these engineering types who take pride in the work that we lost their support, or we lost their support of the engineers who drive Boeing, and they started focusing more on profitability as opposed to the engineering prowess of Boeing, and that's 20 years ago.
Yeah.
And one could argue they think that's the beginning of perhaps some of these problems that we're now seeing 20 years later. I don't know how you get that back.
Well, I think they've done a good job, actually, because Kelly Ortberg is someone with an engineering background. So they have realized they don't need a bean counter at the C-suite level. They need someone who's been an engineer who understands. He's saying, let's get back to the floor. He bought a house in Seattle. He said, we're going back to Seattle. So there is already a shift to make up for what that is a well-documented complaint that the union workers has, if you lost the soul of this company, and this is a fight for the soul.
Right. I always tell people that one of the great drives from an airport to a downtown is in Seattle. You get out of your plane in SeaTac, you get on whatever that is, and you drive to Seattle. It's about a 40-minute drive, and on the left of you on the highway for almost 40 miles is Boeing. And it's airfield after airfield, and hangar after hangar, and plane after plane, and they're taking off and flying all about. That, to me, is Boeing. And the fact when senior management left there, it seemed like for a lot of people, we kind of lost the heart and soul there. So,
and building off of Paul's earlier question, I'm curious, did it seem as though there was a stronger, more intense crackdown after all the hiccups that Boeing has seen this year? Or does this seem like it's kind of been a bubbling up point and it's finally bubbling over as to why workers are so unhappy?
Well, Boeing has had a lot of very public embarrassments, right, in recent times. And I think the employees are saying the executives are not protecting the company's brand and reputation, so we will. We are not okay with the quality control. We are not okay with the way that production has deteriorated over time, and so we are going to fight to do things the right way, because these are engineers who take a lot of value. They love the fact that they can produce some of the most high-quality machines in the world, right? They don't want to create garbage material anymore, so they're fighting for it. And I think this is something that will get resolved. It will absolutely get resolved. They're going to get back to the table, maybe a few more weeks. Some people say we're only at the halfway point. Either way, they're going to come together. Boeing will get back on track. I'm not worried about the future of the company.
Let's pivot a little bit away from Boeing, get back to another key issue, which I keep raising because I just wonder how things are evolving. Are people back in the office? What's the new normal? What's the new normal when you
I guess we are.
When you talk to your clients?
Yeah.
Are we in a permanent hybrid situation now?
No, I mean, right now, I think 2025 is going to be the year of forcing people back into the office.
Really?
Amazon just made an announcement that people have to be back 5 days a week. I think that is regressive thinking, if you want my personal opinion, because think of the language people use when they talk about return to the office, go back to the office. It's going backwards, as if COVID was just a pause and now we can press play again and nothing's changed. But the reality is culture has changed. If culture is how people think and act, we had a major experience that evolved our thinking about how we can be productive. And I think companies that are forcing people back into the office are counting on some people to leave. It's a way to do layoffs without doing layoffs. And they're relying on activity-based management. It's easy to manage activity of your employees if you can see them at the desk. The more elevated way of leading a team is to manage to outcomes, and you don't have to be in the office to manage to outcomes. So companies that want the competitive edge on attracting talent from all over the nation, they're going to allow people to work from home, and companies that have a real estate bill that they're worried about, they're going to force people back into the office.
And I mean, are incentives enough? Is food and all the different things enough to lure people back into the office? Or do you think that a lot of people are really hard and fast, I want to be remote?
Well, it depends on the person, right? There are some people who are just excited to get back into the office. They want the kombucha Fridays and the Hawaiian shirt Tuesdays or whatever it is that people do right now to again, create quote unquote culture. Those are not culture things. Those are just perks. They're fun. Ultimately, it's how are we making decisions? How are people thinking? How are we committed to the mission of the organization? And I can do that at home or I can do that in the office. And I would ask, if you're questioning right now as a leader whether or not you should force people back into the office, is think about what are the results we're trying to achieve? What are the shared beliefs within our team that are getting in the way of hitting those results, and what do we need those beliefs to be? And is working from home going to help drive those correct beliefs that will get us the results or not? That's really the deeper work of leadership rather than, do we get people in the office 3 or 5 days a week? So that's arbitrary.
Well, you think that Amazon might be a little bit of a harbinger? We might see more companies.
Yeah, well, absolutely.
Right.
But also, Amazon is not going to have trouble replacing people that they
At all.
want, right? Because it's Amazon.
Right.
And so there are companies like that can do whatever they want, and they'll be able to hire. Other companies, they have to be a little bit more strategic about how they're going to attract talent.
Interesting. I guess it's just an ever-evolving situation
Ever-evolving.
here at Bloomberg. We're 4 days a week. I don't know. We'll see. I'm 5 days a week, working just fine for me. Jessica Kriegel, thank you so much for joining us. Jessica Kriegel, she's the Chief Scientist of Workplace Culture at Culture Partners, joining us live here in our Bloomberg Interactive Broker Studio, talking about Boeing and just kind of the workplace in general, kind of the evolving U.S. workplace.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, it is earnings fast and furious. I think today was probably the busiest day, or will be the busiest day of the week. What's been a busy week. And we've heard from pretty much everybody across the board, all types of industries. One of the companies is United Parcel Service, UPS, came out with some numbers. The stock is up 5% today, so some pretty good numbers, presumably. Lee Klaskow, he's right here now. Lee Klaskow, Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence. He joins us from our Princeton, New Jersey offices. Hey, Lee, talk to us about UPS. Stock's up 5%, so I guess the market liked what they saw?
Yeah, hey, Paul. So UPS had a pretty good print this morning, and they also, indicated that earnings might be a little better than expectations are in the fourth quarter. UPS has been kind of a show-me story. They've been doing a lot of self-help things, but a lot of those initiatives really haven't bubbled up to the bottom line or the revenue numbers, just given the difficult backdrop. And what we saw today was our earnings per share finally inflected, earnings per share growth finally inflected positively after 7 quarterly declines. So things seem to be working for UPS, and we expect our earnings expectations for the fourth quarter and probably next year to move higher on kind of the progress that they've made thus far.
Hey, Lee, I mean, you mentioned that difficult backdrop. As I'm looking at UPS, we're seeing shares down about 12% year to date. As we're thinking about the future, I mean, how much of a move higher do you really anticipate as we're thinking about the year end? Should investors start to see some gains here?
Well, we don't do buy, hold, sell recommendations in Bloomberg Intelligence, but what we can tell you is that the company are doing the right things to see their margins expand, and our view is that margin expansion could be more than where the market currently is at. And a lot of that has to do with a lot of the cost savings that they've been able to generate. They've been able to, shut down various shifts, sorting shifts. They've been able to close some facilities. and just do more with the network that they have. And if you fast forward, that maybe volumes could start to improve a little more meaningfully from here. They expect a better peak season this year, albeit probably not as robust as they were probably planning for 3 months ago. But the peak season is expected to grow. And the reason for them tempering the outlook for the peak season is given the fact that the peak season is condensed. The peak season, for those that don't know, is from Black Friday to Christmas Eve. And because of that condensed peaks time, a lot of retailers think that some consumers might be going to the stores versus ordering online and making that gamble whether or not you get it under the tree in time.
Hey, Lee, we love talking to you for a variety of reasons, not the least of which is the companies you cover, Lee, give us a real sense of how the underlying economy is doing, whether it's stuff's being shipped by rail or truck or air cargo. What's UPS telling you about kind of underlying activity that they're seeing?
Well, first and foremost, I love talking to you as well, Paul. But what I think they're telling us is the consumer is doing okay. It's not doom and gloom going into the holiday season. I think that you are going to see growth. Like I said earlier, that growth might be a little more tempered, but we are seeing a return to kind of seasonality, which is really good because it's not just going to impact the parcel providers. It's going to impact the truckload providers, like the Knight Swifts and the Werners of the world. It's going to impact the intermodal providers like the JB Hunts and the Hub Groups of the world, and the railroads as well. So, what we're hearing about the consumer and the fact that B2B volume grew for the first time in a long time within their domestic business is also telling me, that things might be a little better in 2025. So, we're pretty optimistic that demand should be increasing across most of the modes that we cover. And, 2025, in our view, is going to be a much better year than 2024 was.
And I do know back in about April, I remember that UPS became USPS's primary air cargo provider. Is that still a topic of conversation? How much has that really added to the business, if at all?
Yeah, so it is a great business win for them. FedEx walked away from it for various reasons, and UPS decided to pick it up. It's going to be consistent volumes at a consistently good margin. And, what they're doing is they're really restructuring their overall business. They've been getting out of businesses that are a lot more volatile. They just sold their freight brokerage business, which was called Coyote, to RXO, and then that was earlier last month. And then in 2021, they sold their less than truckload business, UPS Freight, to TFI. And those were not great businesses for UPS. And now UPS can really focus on being a parcel provider. And to answer your question, what that U.S. Postal Service business can also do, it's going to build density. And density is the name of the game in any transportation company. And so they can build off that density with other volumes.
All right, Lee, thanks so much for joining us. Always appreciate getting your expertise in all things logistics, railroads, trucks, the sea transport, the air transport. Lee covers it all. And again, his transports companies just can give you a real good insight into the strength of the overall economy when you can see kind of what types of goods are being transported all around the country and the world. So some good stuff there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, Norah, Mulinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming video live on, what is that, YouTube? That's the internet.
That thing, the internet.
YouTube.com, so just head over there and search Bloomberg Podcast. Bloomberg News Morning Consult. We got a poll out this morning. I'm just going to guess dead heat. Jodi Schneider joins us, political news director for Bloomberg Television and Radio. She joined us in Washington, D.C. Jodi, what did we learn from the latest Bloomberg Morning Consult poll?
Well, it reconfirms, Paul, that things are just very, very close. Probably couldn't get any closer. It is that dead heat. We've seen some of that during this last year or so of the polls we've done with Morning Consult, but this one is as close as ever. And of course, it's the last one before the election, so it matters as much as ever. We're really seeing, it's up maybe a point or half a point in particular states, but it's 49-49 when you get to all the swing states. And we are focused on those swing states, the ones where they are going to determine who wins the Electoral College, which is who wins the presidency.
Definitely. And Jodi, as you just said, we are really coming up less than 2 weeks away from the election. What are you seeing from those swing states? What has really been the general consensus of this latest chapter?
Yeah, I think the poll really reflects that it is so close that almost, too close to call in a number of states. There's some talk about, well, one or the other may win the popular vote, but that is, almost beside the point. It is those swing states where in the past somebody has won by 20,000 votes or 40,000 votes. Hillary Clinton lost the blue wall states of Michigan, Wisconsin, and Pennsylvania by fewer than 80,000 votes in 2016. So it really is kind of, down to that so-called knife's edge in the final days of the campaign. And that's why you see the candidates and their running mates almost exclusively focusing on those 7 swing states, and the Democratic candidate so much on those blue wall states. She really needs to win there.
Jodi, what do your sources tell you about the timing of when we may have some resolution on the actual vote itself? Will we know 11 p.m. on November 5th, or will it be hours later, days later?
Yeah, that's the question everybody I know is asking me. So that's what everybody wants to know. When are we going to know? And we may well not know that night. Not only the presidential, but the House of Representatives. The House is going to be a close race for control of the House, and it's going to go through New York and California. So we may not know that night who will control the House. We'll probably know the Senate. The presidential, we may not know. In 2020, of course, we didn't find out till Saturday. But you might recall 2000, where we didn't know until December when it went to the Supreme Court. So we may be in a situation like that, and the markets may not wake up to that uncertainty until it starts happening as well, which will be something else for us to cover here at Bloomberg.
How exactly are the candidates strategizing in this last stretch to mobilize voters?
Yeah, so they're really going to those swing states, trying to really make their case, their so-called closing arguments. Kamala Harris is trying to do that and we heard her at a CNN town hall doing this last night, sort of saying, I have a plan for the future, but I have experience with, I've been the vice president for the past 4 years, and Donald Trump will be a danger to America. That's her case. Donald Trump's case has been to kind of double down on his rhetoric of making people feel that this administration has failed them. He's done it on the economy, and he's been successful on the economy, including it shows in our poll that he is the one people trust more on the economy, and he's making the case that to leave this with her would be a danger to the future of this country. So they're both making arguments based somewhat more on that their opponent would do harmful things to the future of America than as much on their record. Their closing arguments are kind of mirror images of themselves in some ways.
Jodi, turnout, I've been told by the experts, is really, really important here. What do we expect turnout to be? And number 2, does either party have an advantage in driving turnout?
Yeah, so I think turnout is key. It's certainly key in those swing states. The other interesting fact, Paul, to add in all this is early voting. We're seeing massive early voting. I think it's as much as 18 million or more people have already voted either by mail or in person, and we will be seeing a massive amount of that in the next week, historic amounts of early voting. Now, in the past, people said early voting tended to favor Democrats, but now the Republicans are pushing it as well, and it's becoming more the the fabric of people thinking, well, why should I wait? Why should I wait till Election Day? So some of these closing arguments really might be falling on so-called deaf ears because people have already voted. And we'll see when we do the historical analysis of this campaign how early voting played into it.
With about 30 seconds or less, just how important is age in this election? Is that playing a factor at all?
It's playing a factor, but more gender seems to be. It really does seem to be a very gender-focused election. The Democrats, winning more women, and Donald Trump kind of doubling down on the male vote, both older and younger. But it really, gender seems to be the dividing line here more than age.
Jodi, thank you so much for joining us. Really appreciate your reporting. As always, Jodi Schneider. She's political news director for Bloomberg Television and Radio. She joins us from our newsroom in Washington, D.C.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Mulinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming the video thing on YouTube. So head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. As John was just reporting, new home sales came in a little bit better than expected. Let's break it down with an expert. We can do that with Bloomberg Intelligence. They got everybody over there. Drew Redding. He's a Bloomberg Intelligence U.S. home building analyst. Drew, what you make of these numbers here? The new home sales, 738,000. The consensus was 720,000. So a little bit better than expected.
Yeah, not surprised to see a good number in September. You have to remember, in September, we had mortgage rates at the lowest level in about a year and a half. So they hit as low as 6.1. So we got the data today, and it's already backward looking because since the beginning of October, rates have shot back up to about 6.9%. And if you look at the payment on a monthly basis, that's about 9% higher. So what we have heard is things have started to slow down. The builders are noting more seasonality. So we would expect things to slow down a little bit as we get October's data.
So as we think about the Fed moving forward, Drew, and people expecting potential cuts, what does this mean for home builders when we're thinking about it on a longer scale, looking further out?
Yeah, well, certainly, it's all about affordability, and mortgage rates are certainly a key part of that. Our expectation was that we would get somewhere in that low 6% range that would help spur a little bit of activity. I think you really need to see a 5 handle to see more robust activity. But it's important to keep in mind it's not just about rates, it's prices too. Prices are up more than 50% since the beginning of 2020. That's really the biggest component. And we did an analysis on monthly payments relative to income, and based strictly on that, just to show you how to whack the market is right now. Prices would need to fall somewhere about 25% in order for monthly payments relative to income to fall in line with historical averages. So it's a combination of what's happening with prices and what's happening with rates.
Right. And so if we were to see a potential uptick and were to see a flood of existing homes to come back on the market, how much competition do you think that would actually pose for home builders when we're thinking about new properties?
Yeah, that's a great question. Inventories are up about 20% compared to last year. At the national level, they're still down about 20% compared to pre-pandemic levels, but it's very market specific. You're seeing markets in Texas, Austin, Dallas, Houston, and San Antonio, as well as most of the markets across Florida, where inventories are rising, anywhere from 30 to 50% year over year. They're back above 2019 levels. So the competitive dynamic is certainly shifting for builders in those markets, particularly in Texas. And I think what you'll ultimately see is that builders are going to have to continue to lean on incentives. I think it could start to put some downward pressure on prices as we move forward. So if builders want to clear that spec home inventory that they've built up over the last year, they're going to have to keep their foot down on the gas pedal in terms of their use of sales incentives.
Hey, Drew, thanks for joining us. Really appreciate you hopping on there. Drew Redding, home building analyst, Bloomberg Intelligence from Princeton, New Jersey. A little bit better than expected new home sales, so we note that.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, when I started in the media business on Wall Street 35 years ago, my clients were radio companies, TV companies, magazine companies, newspaper companies. Then along came cable television, and then this thing, the internet, came
along. The new age.
Which upended everything. Our next guest was the M&A banker for the old media, and now he's the lead M&A banker for the new media. Terence Kawaja joins us. He's the founder and CEO of LUMA Partners. I worked with Terry moons ago back on Wall Street when we were banking some of those older media companies. Now it's all about Google, Facebook, Snapchat, all these kinds. Amazon now a major player in digital advertising. Terry, thanks so much for joining us here in our studio. You are in the biggest, best industry I can think of. I mean, digital advertising, it has exploded over the last 10 to 15 years. You bank the companies that support the technology of all those big media companies that we like Google and Facebook. Talk to us about the state of digital advertising today. Is it as strong as it's been over the last several years?
Yeah, look, first of all, you're absolutely right to denote that, this is massive. We're talking about $1 trillion of spend globally. And what's interesting about it is that the vast majority of that spend is actually, those ads are bought programmatically, and all that's just a fancy word meaning auction, bought in auctions. And so there's a lot of technology that requires sort of real-time assessment and targeting of each particular ad slot that happens in milliseconds. So the technology has completely moved to this sort of software intermediated world. From a business model standpoint, the giants that you mentioned, they're somewhere in the 90+% of their revenue comes from advertising. Not everyone can be Bloomberg, right? But it's beyond just those large platforms. So media, and historically subscription-based media, like a Bloomberg, but also like a Netflix and like a Disney, that had these sort of B2B models in the old TV world that you and I covered well decades ago. They're all now shifting to advertising in order to garner larger audiences and supplement their revenues.
I mean, obviously this is an ever-evolving space. It seems like there's something new every single day. How do you all stay nimble?
You're absolutely right, Norah. In fact, I describe this sector as having 5 attributes. Scale, I mentioned $1 trillion, right? Growth. So if you looked at the compound annual growth rate of digital advertising, it's over 20% for 20 years. Name another industry that has that characteristic of growth. I'll wait. There is none. It has fragmentation. There are thousands of companies across this ecosystem that either offer services, media, data, software. It's very, very complex. That's the 4th item. Tremendous amount of complexity. And 5th, what you mentioned, Norah, it's dynamic. It just keeps changing. If you don't like it, wait 3 months, it'll be different. Either there will be a new technology, or there'll be a new media channel, witness, TikTok, vertical video, short form video, or there'll be a new technology policy, Google with, removing cookies, which is their sort of identifier, or there could be new regulation. And we're seeing a virulent antitrust and privacy legislation from both the US government and Europe.
That's kind of where I wanted to go. Terry and his firm, LUMA Partners, they host these leading conferences where all these tech people come together, and I go to these conferences and I don't know anyone. I don't know any company, but I just step back and I say, collectively, these are the people that put all the ads on the Googles, the Facebook. They figure it out. That's how I think about it. Talk to us about M&A in your business, because it's comprised of, in the advertising technology space that supports all the digital advertising that we all experience every day. A lot of M&A, and that's where you fit. Talk to us about how that activity has been over the last several years.
So first of all, you're right. Your non-recognition of these people that are really driving the internet. I mean, think about it, right? Who gets the headlines? Rupert Murdoch, David Zaslav.
Right.
Sorry, great guys, meaningless in terms of their power and influence over how this all gets made. The real people are these people that we don't even know. Doing sort of B2B
but you know them.
Advertising technology. Certainly do. So this sector has gone through a wave of new company formation, and there's always new innovation, so there's always new companies, but it's direly in need of consolidation. That's where I identified this as an opportunity 14 years ago when I formed LUMA, and it's completely manifested and has a lot more to go. Lately, the last 18 months, or 18 of the last 24 months, we saw a huge slowdown in M&A activity, a 10-year low, because, the economy, all these macro uncertainties, people weren't sure what was going to happen with interest rates, with inflation. And so basically everyone cut costs, improved their profitability in 22 and 23 in anticipation for a recession that never came. I swear to God, if we get to the end of 24 and there's not a recession, Jerome Powell deserves to be on the $20 bill. I mean, what an incredible job. And so now everyone is like, wait, we haven't done M&A for a couple of years. We direly need new technologies and new markets to enter. And by the way, we've got our EBITDA in a great place right now, and we can't, and the ad market continues to grow. So not only is there not a recession, digital ad spend is growing 14% this year. Now I'm talking about, this is a $1 trillion industry growing at 14%. Right. Those are large numbers. So every year it forms like an industry size of growth. And next year forecasted to grow 12%. So turns out you can't cut your way to growth. And so they're back on the bandwagon, and strategic M&A is coming back.
The biggest platforms, as you mentioned before, the Facebooks, the Googles, the Amazons of the world, boy, it feels like Washington has really got the regulatory sites trained upon them. How does that impact kind of everybody else in the industry?
Excellent question. Here is my problem with the DOJ and the FTC. So Jonathan and Lena, their well-intended policies to curb big tech, no one would argue with that. Big tech, look, come on, man. These companies have enormous power. So by all means, rein them in. However, the effect of the well-intended legislation was to put a pall on all M&A activity. I mean, when they blocked the Simon & Schuster deal, it's like, sorry, 1977 called and they want their antitrust legislation back. So it's totally ludicrous. They've, I think, overstepped. And the net result is, if you've got a half a dozen companies that are omnipowerful, like Amazon, Google, Facebook, it's companies numbered 7 through 50 that you need to be doing M&A in order to compete with the top 6, and now they're foreclosed from doing so. And so actually it's had the opposite effect. It's actually increased monopoly power.
So let's talk AI. I mean, not that big of a deal, but I'm curious, how does it actually impact your business? Of course, that is something that everyone's been watching in terms of AI and how obviously it trickles into social media and how we think about the internet and things of that nature. And I'm sure it's very, very critical to digital ad sector.
Yeah. So I put AI in the category of shiny new objects, right? I mean, and marketing loves the shiny new object. People in this industry went crazy for, oh my God, 5G, Web3, NFTs. And, I feel there's a responsibility as someone who understands what's going on here to call balls and strikes. So I said, this is nonsense. This is bunk. You're wasting your dollars. By all means, marketers, spend in those categories for experimental purposes to look cool and speak at conferences. But you just know that you're lighting all of that money on fire. Now, AI, there's a lot of hype around AI. So wait, are we saying this is yet another shiny new object? I believe this is one where there's both hype and reality. In fact, one could make the argument that digital advertising and media is the perfect application for AI, because these are large language models that do a lot of interesting things, but they need huge amounts of data. Well, there is no industry with more data in terms of real-time bidded trillions of ad calls daily in real time. It's the perfect application for AI. And we're going to see a spectrum from evolution to revolution. I put them in 3 buckets. Of course, they're going to improve efficiency in and around media, data, and workflow around how all this stuff works, because it's complex, and AI will improve that. Then there's another category around generative AI that's going to improve content and the creative of the ads so that they become more effective, not just more efficient, but more effective. And then there's a third category of who knows. It could fundamentally change navigation on the web. What do I mean by that? It's going to change search, because search is where you ask questions, whereas AI gives you answers, right? Why do we need to manually navigate to websites if the publisher can simply publish to the LLM, because the interface isn't going to be manual navigation to a www it's just, you're just going to ask your AI and AI will give you the answer. So the whole digital media world, from a publisher standpoint, could be going from B2C to B2B. And where the B2B, the last B on B2B is in fact the LLMs of the AI.
You haven't lost your energy, dude.
Oh,
no.
Hell no. I'm just getting started.
I told these people, when this guy comes in, you're gonna know. Terry Kawaja, thank you so much for joining us. Terry Kawaja, he's the founder and CEO of LUMA Partners, really focusing on the digital advertising market, all the companies that kind of fuel the global digital advertising. And what's digital advertising? It's all the ads that come on your Facebook feed,
Snapchat.
your Google search, Snapchat, all that kind of stuff. Somebody's responsible for that, and Terry is certainly one of them, the investment banker to the tech world, getting an upbeat view of digital advertising, artificial intelligence, a big player. If you're an advertiser, you want to make sure that your ad message gets to the right person, the right customer or potential customer, and AI can certainly help in that. So we'll keep an eye on that. So we appreciate getting a few minutes of Terry's presence here in our New York studio.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.